All right. Hello, everybody. We are back with another market close. It is Monday, July 8th, 3:46 p.m. Palantir, still the story of the day, as Blake says right here in the chat. Palantir wants 28. Right now, we're at 27.89. We just touched 27.95, or actually 27.99. Basically like 20 minutes ago. And so we were hovering to try to get back to that $28 level that we saw in the pre-markets. As soon as the market opened today, we kind of dumped from that $28 level all the way down to $26.87. We hit $28.35 in the pre-markets, and then slowly since then we've been making our way back. Right now, $27.90. It does look like we are going to get our second day in a row closing above $27. If we actually close above 28, then that would be pretty damn incredible. A couple things I want to say on this, and then we'll get started with everything else going on. I think the big thing right here is that it is really exciting to see that the market wants to put Palantir in this $27 range. I posted about this on Twitter like 20 minutes ago, but how amazing would it be if Palantir actually develops a base, like a real base at these levels? Because I think since February 5th, we've been basically hovering from 23 to 25. And only in the past couple of weeks, we've broken out of that 25 into the 27s. And now if 27 becomes the base, or even 26 becomes the base, and, when Palantir drops, 26 is there to support it, just like 23 and 22 were there to support it over the past couple of months, that gets really exciting. So why is this happening, and how do we make sense of this? Well, first of all, I want to share a couple of things that we didn't talk about in the morning. Number one, we didn't talk too much about the Nvidia partnership. This is probably not a reason why the stock is up right now, but I do think to an extent the market cares about this. Arnie tweeted about this. Nvidia is Palantir's operating system for semiconductors, and they have a collaboration with Merck in Germany. So not Merck, the medical company, but there's another company in Germany called Merck that they're working on, which is an OS for semiconductors. Basically, think of it like Skywise, what they do for Airbus with semiconductor companies. They partnered with ASNA to achieve superior yield rates and minimize defects during manufacturing. ASNA is a leading innovator in semiconductor manufacturing, specializing in sealing, gaskets, and component expertise. Now, what's interesting about this is that ASNA is a player in the hardware infrastructure to build out AI, because they're building out semiconductors. Palantir's Nvidia platform, quite frankly, I did a video on this like years ago, and we've done a couple of videos since then. Not even a year ago, almost 3 years ago. It was end of 2021 when they first announced this back in like December. But we've kind of forgotten about it, and we haven't talked about it for a long time. The really cool thing about this is that this partnership, this operating system partnership, comes a week after the Surgeons partnership with the Mayo Clinic. And Concordance is the company, the hospital that we built Surgeons with, which is another kind of Skywise, but in this case for healthcare. So I think what the market's seeing, and maybe this is not why the stock is going up, maybe the stock can go up for a variety of the reasons, but at least I think what the market is trying to see is Palantir building out operating systems for various industries, either they're semiconductors, healthcare, or airplanes. And as a result of that, the market is treating them not as a typical SaaS. They're treating them as a SaaS that has a massive AI tailwind that is taking over various different indices, various different industries. S&P 500, 540, 554. We hit 556.25 in the morning. Right now, basically flat on the day, but still hopefully closing above 555. And Palantir, in comparison to all the other SaaS names today, still green. I mean, a majority of them are red. Oracle's a little green. CrowdStrike's a little green. Twilio and GitLab, and when I mean a little, I mean like 0.02% up. Everything else in the SaaS space is pretty red. You got Palantir there up 2.35% after a 5.2% day on Friday. So maybe the market is looking at Palantir, even if it's not looking at these specific industry operating system AI types of partnerships, they are looking at them as a differentiated AI startup or AI SaaS company. And as a result of that, they may be giving it a premium that we'll see on earnings that will continue to expand. Now, our good friend Chris, who came on Palantir Weekly and tried to give us a little bit of the bear case, he is officially short Palantir. He tweeted this. He tweeted this like 30 minutes ago. He's not actually shorting Palantir. He's doing iron condors on Palantir. I'm still learning exactly how iron condors operate, but essentially it creates a spread between two prices, and it looks like his prices are 20 and 26, and he got paid about, call it $8,000 to do this this iron condor. So you need Palantir to be in the range of 20 to 26 by January 2025. That's when it expires, in order for him to recognize all of the premium that he got paid up front. If not, he's going to lose all this money. So essentially, my understanding is that it's two put debit spreads being put against each other. That's essentially what the iron condor does. Yeah, as Adam says, iron condors are great for a range. So he believes that Palantir is going to be range bound into January 2025. If Palantir crushes earnings, then they are going to break out of this range, I believe, and get into the 30s, maybe maintain this multiple. So still get out of the range that he wants it to be in, even if it's not in the 30s. If they flop on earnings, then they're probably going to fall back down, and those iron condors are going to be worth money. And obviously you can close those out early so he can make a big profit if there is a drop back to like 20, 22, 23. Just a question of if that happens. So what do you guys think? Do you think he's going to win that contract? Or basically the thesis of the contract is Palantir has to be, let's call it, below 26 by January 2025. That's his core thesis. If that's not the case, then he's going to lose basically $8,000 on that. So that's what we have on Palantir. We'll see how they close in about 8 minutes, but incredible day for Palantir. Congrats to shareholders. This run has been quite extraordinary. Now Palantir stock year to date is 68%. I mean, dude, talk about beating the market. I know we still have 6 months left, but not bad. Now, what I'm going to be curious to see at 4 p.m., I think it releases at 4 p.m. or 4:10, is if any insiders sold. So I'm going to be very curious to see today, did Karp, did Teal, did Sham, did any of them sell? It doesn't feel like anyone sold, and they haven't sold in the past month, really. So we haven't seen any major insider selling. Maybe in the morning, this like red candle all the way to 26, maybe that was them selling, but I kind of think it was just the market taking profits. We didn't see any massive red candles that would indicate, oh, an insider is selling. So we'll see. I'm very curious if they took profits. If they didn't take profits at these high levels, usually they tend to take profits when the stock runs up without a catalyst. Maybe even they are thinking, hey, we believe we're going to crush Q2 and we'll get even a better price after Q2 to sell some of our shares. And so I think that will be a little bit of a sign after the market closes when we see if they sold any shares. So we will see. We will see what happens. Now, in a couple other things that are going on, and then we'll get into macro. Boeing, apparently, we talked about the fine they had to pay this morning. Boeing just had a wheel that they lost on a 757 that was taken off, I believe, United. This was United. 249 people were on board. It was going to Los Angeles. It lost its wheel just 50 minutes ago. No one has been hurt. No one's been injured. But it is kind of crazy because they literally just pled guilty yesterday and paid a fine, and today they lost the wheel as they were getting up. I mean, that's one of my worst fears. Like when you're on a plane and you take off and you just hope everything's good, and then imagine a wheel gets lost and then you have to do an emergency landing. Like that sucks, dude. So Boeing's gains were wiped out for the day. I think right when that news came out, it was up 2% on the day. Now Boeing is up 0.61%. So it did get a red candle on that, but not the best news in the context of Boeing. So yeah, not the best for Boeing. Cool. So that was Palantir. Let's talk Tesla. Tesla did fight today. It fought really hard. Could not get above that $258 level. So still at 253.9, probably going to close above 250, which is good. 2 days in a row above 250. Was not able to break through into 258. It did try really hard to get there at one point. 259.44, tried to get into 260s, and then it got rejected at those levels right here at 254.20. The point is with Palantir or Tesla, even though it's not getting to some of the next milestones, whether it's $28 or $260, it's closing, it looks like, at very, very nice levels. I mean, Tesla above 250 is phenomenal. Still up 1% on the day. I mean, how many days did we look at Tesla at 170, 174, just like stuck within that range for months now? And now you got a 2, a 5, and a 4 in front of Tesla, which is really exciting. And then Palantir right here. Palantir really didn't dip below 27.5 for the majority of the day. It stayed there for like the early 30 minutes, and then it broke above 27.6, and then it stayed above 27.7 for the far majority of the day. So really, really exciting price action on Palantir and Tesla as well. June said, I once crash landed in New York City when one side of the landing gear would not come down on the way back from Germany as a kid. Oh, wow. That is kind of crazy. I've never been in a situation. I've been on a lot of flights in my life, never been on a situation like that. I've been through heavy turbulence. I'm pretty sure everyone's been through heavy turbulence. But never the landing going wrong. Although every time we land, I always feel like something's gonna, because you land and then it goes so quick. But yeah, that's not the best look on Boeing today with that happening. Nike also, speaking of value stocks like Boeing that have not had the best year, Nike bottomed today at around 73.12. So it's down another 3% today. Still not convinced on Nike, in my opinion. I don't know if it's the most attractive thing to sell puts on, or if there's a real turnaround story there. I'm still doing research on this, but as of now, the lowering of the guidance shows me that they're going to take a long time to figure out how to revamp growth, and there's no strategic initiatives built into Nike yet to create that growth. So from that perspective, it's just not the most exciting, even though it is down. Same thing with Walgreens right here. Walgreens down. Wow, another 3.91%. Last time we looked at Walgreens, it was at 11.30. There you go. Walgreens is down 10.82. So Walgreens are really getting zero love from the market. Market cap is $9 billion. These guys do about $120 billion of revenue a year. That's kind of crazy, right? They do $120 billion in revenue a year. Their market cap's $9 billion. Price to sales is 0.06. The dividend yield is almost 10%. All these numbers sound kind of juicy, dude, but then you realize like Walgreens just kind of sucks and they've like not lived up to expectations on the past 5 quarters. Bankrupt for Walgreens. I don't think Walgreens goes bankrupt. I think it's too big of a company to go bankrupt. Then again, you never know. CVS has not had the best run either. And then where's Starbucks? Starbucks also had a little bit of a tough day. Starbucks, 74.59. Wow, it kind of looks like money left the quote-unquote value names. Starbucks, Nike, Walgreens. Starbucks and Nike not really value, but I mean, they got beaten up so much this year that I think investors started to consider them to be a little bit more value. And it flowed in to the Mag 7. So let's look at the Mag 7 as we get into the market close in 2 minutes. Microsoft down a little bit. Meta 529. Meta was at 530 or 543 at one point. It did hit a 52-week high today. Google 190. Amazon 199. Bezos is selling $5 billion worth of stock, but that's not holding Amazon down. He did file that not a couple of weeks ago, like literally on Friday. Still, he's not that was not enough to get the stock down. It is getting rejected at 200, but the market doesn't care too much. Apple, new all-time high, 227. Tesla, 253. And then Nvidia at 128. Now, again, on Nvidia, we were talking this morning, that upgrade they got, it seems like it really did matter. UBS saying, hey, we think that the Blackwell chip is going to bring in a ton more revenue. And as a result of that, Nvidia was able to get some more momentum from the street. Their exact quote was, our recent supply chain checks confirm our prior suspicions that demand momentum for Blackwell rack scale systems remain exceedingly robust. Another firm also upgraded them today. I'm forgetting the name. Oh, Wolf Research. Wolf Research said recent supply chain checks show a path to 50% content growth for NVIDIA GPUs in fiscal year 2025 with incremental upside driven by unit growth and improved networking attachments. They raised their estimates in 2025 to $177 billion a year with $4.03 a share. And so you put a 40x multiple on that on a price earnings, you get closer to 160. They have a price target of 150. So every firm on Wall Street still sipping the Nvidia Kool-Aid. They're not giving up their Nvidia bull thesis, even though one firm last week finally started to question the potential for Nvidia to live up to the results. So not bad at all for Nvidia. All right, here we go. Let's see what we get on the close. It is Monday, July 8th. Thank you, everybody, for being here. The stock market is now closed. All right, markets closed. Palantir, second day in a row since October 2021, closing in at $27.71 on the day. Not a bad close. I mean, as a Palantir shareholder, you really can't ask for that much more. 27.70 is what we just want to hold 27. We're at close to 28. And now if we maintain these levels for the next couple weeks into earnings, as long as we have a decent earnings, which I kind of feel like the market is front running this because they think we have a decent earnings, even though there may be some FOMO. Maybe we break out from 27 into the 30s. S&P closes the day at 555.32. Not bad. IWM actually went green. Small caps, 0.68%. So not bad on IWM. Tesla closed at 252.94. Second day in a row, closing above 250 in the past 6 months for Tesla. So that's amazing. Walgreens 1082 a close, Nike 7308. Robinhood had a little bit of a tough day. Robinhood down 2.6%. Now, I want to blame Bitcoin for this, but Bitcoin did do a little bit of a rebound throughout the day. So it fell to 54. That's when Robinhood got hit, and then it just kind of spiked back up about 2%. Now, Germany, we got some updates on Germany. Germany sold 16,000 Bitcoin today, apparently. So they have offloaded a ton of Bitcoin. I guess the Bitcoin and crypto investors kind of ingested that and they didn't care too much about it. But Germany did offload almost half their Bitcoin supply. I think exactly half their Bitcoin supply. So Robinhood, you thought they would give it a little rebound with the Bitcoin rebound, but that didn't really happen. So kind of was just kind of a laggard the entire day. I like the low 22s going into earnings, and I actually think that lowers expectations really nicely for them to gap up to 25. But I think CPI on Thursday is really going to determine where Robinhood goes. If that comes in cold, then we should have some good momentum because rate cuts are probably on the way. Nvidia closes at 128, up 1.88%. Qualcomm 207.89. Intel 33. Intel had a hell of a day, up 6%. The puts that we sold on Intel with me and TJ, those puts have done very well. $34 on Intel, up 6.15%. SolarEdge up 9.26%. That means Enphase should have had some momentum. Yep, Enphase up 5.84% on the day. So solar seems like it got oversold a couple of weeks ago, and the market ended up buying it today. Snowflake down 1%. Carnival Cruise up 2%. Amazon 199 close. Rocket Lab 497, almost $5. At one point, it was $5 on the day. Meta 529. Disney 97.37. Google 190 close or 189. QQQ, wow, 497 on the Qs. 497 on the Qs. Not bad. Not bad. Any thoughts on GLW amid data center fiber optics for AI had a killer day on guidance range? So I saw this one have a good day. GLW up 11%. I don't know enough about this company. $36 billion market cap. It's on my list. I'm going to start looking at it a little bit more, but I did see today some people were tweeting about this one because of this guidance raise that they put out. So this one, I'm not in this one, but it's up 12%. So if you are in this one, congrats on this one. SMH, that ETF had a good day as well. That one right here up 1.66%. Occidental was down because oil prices did start to come down a little bit. HIMS was up it was down 1.34% of the day. And then JP Morgan, they're going to have earnings on Friday. So JP Morgan's basically at where it was at the top. It's 205. The top was 209 on JP Morgan. It had a hell of a year as well. If all the banks have a good Friday, then we're going to see some more momentum on banks. And then hopefully that goes into tech stocks as well. David, thank you for the $27 super chat. I would love to see Amit, aka the king of the stock market content, interview the CEOs of these innovative companies: CrowdStrike, Palantir, TMDX, Rocket Lab. I don't know the names of the other ones, Enovix and Databricks. That would be really cool. I would love to interview those guys, and hopefully we do get to interview those guys eventually. But we got to keep working right now. Now, the thing about Databricks, funny you bring that up. Databricks, I believe they're going to get ready to go public pretty soon. Maybe not this year, but early next year. Last time they were valued. Oh, I got to show you guys something as well. Last time Databricks was valued, it was valued at $43 billion in August of 2021. Palantir is worth about $60 billion. Databricks is growing faster than Palantir. They're doing relatively the same amount of revenue, maybe a little bit more. I would be curious to see what Databricks IPOs at in terms of a market cap and what the market would be willing to pay, especially if, there is an AI tailwind, but I think the market would be saying, hey, is it another Snowflake? Is it something that's just like kind of AI, but there's not a real AI, sort of moat there? But I think when they go public, that's when we're going to know that AI started to get a little bit more bubbly. Not saying Databricks would be in a bubble, but as soon as the IPO markets and that much liquidity opens up for AI companies, it'll be interesting to see what happens in the context of Databricks. Now, Databricks brings up the next topic I wanted to bring up here. I found a startup today, Hebia.ai. Why do these guys get my attention? They raised $130 million. And this relates back to Palantir in a second. They raised $130 million, and their website, quite frankly, I'll put it in the chat, it really just looks like a version, like their version of AIP. They show a bunch of different use cases. So if you go to the top right here, credit, advisory, legal, asset management, corporate, real estate consulting, and they connect LLMs to big data sets, and they drive change within institutions by making decisions become easier. So a couple of things they do for different companies. They leverage cross-firm knowledge to drive faster client value. They build agents to review more deals. They automate quarterly earnings reviews. They synthesize volumes of information into clear, actionable insight. All of these buzzwords sound very similar to Palantir. I mean, it sounds literally like what AIP is doing. It's just AIP is connected to Foundry and the ontology, et cetera, et cetera. And you've got all of that data governance, data transparency, et cetera there. Now, what was interesting to me about this is that they raised $130 million from Andreessen Horowitz, big VC fund, Google Ventures, Index Ventures, and Peter Thiel. So why this goes back to Palantir, I kind of feel that the market is giving Palantir this massive premium that we're seeing right now, even though Palantir hasn't put up the growth. Because if companies like Hebia are raising $130 million, I would imagine if this is a Series B, their market cap is at least $1 billion, if not a couple billion. If these private companies that essentially are doing what AIP is are getting a multi-billion-dollar valuation in Series B, then Palantir, yeah, they're going to get a premium in the public markets because Palantir is actually producing revenue at the tune of almost $3 billion, and they're profitable, and they're working with, the biggest companies in the world, given Palantir has at this point, 10-year history with different clients, and then obviously the government business that is very sticky. So I think one of the reasons we could point to why Palantir is getting this momentum is because and this happens all the time, right? If private markets are dictating particular values in terms of valuations, then public equities are going to reflect that. It's also the opposite, right? When public stocks tank, that's why 2022, I mean, a perfect example is Klarna. Klarna was worth $46 billion. It was one of the best fintechs in the private market. It went down to $6 billion because all the fintechs in 2022 lost all their value in the public markets. So if we see a resurgence of AI, this is why I was bringing up Databricks in the private markets getting ready to IPO, Palantir will pump because all that money is going to be chasing kind of the same theme. And that theme is going to be AI, potentially enterprise AI, et cetera, which also explains why Palantir is getting a premium over some of the other SaaS companies that are just seen as SaaS companies, but not AI companies. And so it's interesting. Now, do I think Hebia is competition for Palantir? Yeah, I definitely think they are competition for Palantir. The question is this space big enough to have multiple players? And I think it is, but this is where Palantir's go-to-market is so important. I mean, if Hebia is going to, banks and consulting firms and real estate companies saying, hey, we can automate your services, we can build you AI agents, blah, 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 we can do all this stuff to connect your data. I mean, so can Palantir, right? So the question is just, does Palantir have access to those clients over a company like Hebia and probably the other 1,000 startups that are working on this stuff? And can Palantir sell effectively? And if they can, then I think they're going to win. And they're going to get a lot more premium from the market. Okay, let's see after hours what we got going on right now. Palantir 2778 in the not the pre-markets, in the after hours, and then Tesla 252 down a little bit after hours. Palantir options for $920 $31. Okay, let's take a look at that. Palantir options for $920. So September 20th. Let's see. I'm assuming a lot of people are starting to buy up calls given the momentum we're seeing. So $31. Wow, 48,000 calls are open. People are buying. Either they're gambling or either they're going to be right on Palantir getting to $30 by September. Now, remember, if Palantir gets to $30 by September, or even $30 in general, right now the market cap is on Palantir. Tesla's about $806 billion. Palantir, $61 billion. We're going to be looking at closer to 74-ish billion on Palantir if we get to 30, or about 70 billion. Which the question is just going to be, do they have the growth to kind of justify that in the broader market? Let me check the SEC filings. Nothing filed yet. I think we'll wait another 10 minutes and see if we get any sells or not. If we get 0 sells today, it's going to be really exciting, dude. If no insiders decided to sell today, that is going to be nice to see. Because that definitely means that potentially they feel that Q2 is going to go very well. Let's see what ends up happening there. If Palantir gets to $30 in general, just know I probably lost my shares writing covered calls. You got to roll those out to like 2026, dude. Shout out to Adam in the chat. Adam had some Tesla puts. He was underwater on them for the majority of January and February. He rolled those suckers to a 250 strike for January 2026. And lo and behold, we're at $250 in July. A couple months later, he was able to close those for cheap. So sometimes rolling really does work. And you buy yourself enough time to get out of a sticky situation. Any comment on the ARM run? I think the ARM run is being done by SoftBank. They're squeezing the shares. They own 90% of it. They're not selling. Remember ARM, guys, ARM had 5% of Nvidia, and they sold it in 2019 for $3 billion. That stake would have been worth $160 billion today. ARM, I thought, and most people thought, were going to dump their shares on the market after they squeeze it in like the past 3 months. They've squeezed it so like strongly that they haven't dumped their shares. And I think Masa-san, the leader of SoftBank, I think he feels that because they missed out on Nvidia, they want to make ARM their next Nvidia. And so they're going to keep squeezing it, which means they can't sell 90% of the shares they own. Only 10% are available to trade. I think they want to get this sucker to $1 trillion because I think they missed out on Nvidia and they got about 800 billion left to go. So if ARM ends up becoming as important as it currently is, and even more in the next decade, which it probably will, and they don't sell any shares, I could see ARM just keep running. It would not be a company I short, even though I think it is grossly overvalued, but probably not going to be leaving anytime soon. Mr. Ram says, amid roll to the 12/18/2026 $37 strike for $34K. I'm addicted to premium. Okay, so the question is, do you think Palantir is $37 by December 2026? I mean, look, the good thing is with these covered calls, you got your premium. The bad part is if Palantir is like $60 or something by December 2026, you're losing out a lot of upside. So 37, personally, I do feel I feel Palantir will be above 37 by December 2026. I could be wrong there. But when it gets there, maybe you just have to pay to get out of that covered call, give back the premium, or keep rolling it. But the rolls get more expensive every time the stock pumps. I mean, it's hard to roll an Nvidia covered call at 85 when Nvidia is 120, right? You're just paying so much to continue to keep rolling. ARM's forward PE sitting at 90. Yes, that is it's expensive, bro. It is. The price to sales is 60, bro. The price to sales is 60. They're growing 18% year over year, doing $3 billion in revenue. Market cap's $200 billion. Like, it's not Nvidia growth, but SoftBank has absolutely done a great job manufacturing these squeeze on ARM, and it's working. It is absolutely working for them. Okay, so let me pull up a couple of clips that I wanted to show. First is Bernstein talking more about Nvidia and why they are more excited. And then after that, I want to talk about a Wall Street Journal piece that came out a couple of hours ago, speaking on the Fed and why they're expecting a rate cut to basically happen no matter what by September. And if that's the case, I think that's another reason why markets are pumping, because they know the rate cut's coming. So let's hear a little bit of Nvidia, and then we'll keep going from there.
How early? Explain. I mean, to people who say, how can that possibly be true? Now you're starting to see the articles trickle out. Oh, AI might not be that transformative. Oh, talk about why this stock can still have more room to run.
Yeah, you bet. So people get nervous, and I get it. Don't get me wrong. I mean, the stock, and not just stock, but the numbers have run so far, so quickly that people do worry about sustainability, and I understand that. But at the same time, you can sort of look at where the shares are trading on a valuation basis. They're much cheaper than they were before this started. As much as the stock has gone up, like the demand for the parts and the impact of the financials has gone up even more. It's been really amazing. We are at the point now where we're seeing like massive amounts of capex from the hyperscale players, which I think is good. I think where people get nervous is on the enterprise side. We are still in the experimentation phase, and this is true. Like enterprises tend to move slower, but I do like the amount of breadth that we are seeing here. There are many enterprises that actually are experimenting here. Nvidia talked about this. I think they talked about like large cloud vendors were only about 40 or 45% of their total revenues. Their customer base is still broadening out. We are seeing more and more deployments as business models are getting built on the enterprise side. But it does take time. Like the hyperscalers can build up very quickly. The enterprises, take a little longer. And I kind of get that nervousness. But at the same time, everything we're seeing right now, at least in terms of near medium-term demand, still seems really, really strong. It doesn't look like we're seeing any signs of slowdowns yet.
The market cap is $3.15 trillion. And when we did our segment a little while ago on the race to $4 trillion, I think it was Gil Loria made the point, you can't have both Microsoft and Nvidia reach $4 trillion at the same time, because his line was basically, Microsoft can't afford for Nvidia to be that necessary. And if Nvidia is going to be that large, then Microsoft's margins will be destroyed and its profitability will be called into question.
I don't know about destroyed. You have to remember a lot of the capex that's going on right now is not necessarily all incremental. Like you can go look at sort of spending on traditional data centers, CPUs and traditional servers, networking. They're all in the toilet right now, right? I mean, so there's been a pivoting of spend from more traditional things to GPUs. Some of this GPU capacity as well is fungible. Like these cloud vendors can use it for their existing needs as well. Not all of it is generative AI. Some of it is things like recommendation engines from players like Meta, like other like more traditional, more legacy types of machine learning where there's already a clear return on that.
All right.
Now, so that was the bull case on Nvidia, and a lot of us know kind of the bull case. Again, the argument being that the hyperscalers are spending so much on CapEx that they're going to be able to continue building out their AI infrastructure. That's good for Nvidia. They're going to be able to license that GPU spend. Let's hear from Mike Wilson. This is a 2-minute clip. This is the guy who, again, has predicted a recession for the past 2 years. He thinks a 10% pullback is coming, the opposite of what you just heard from Bernstein. Here's his argument for why we're probably going to get a correction between now and the election.
How much can these companies start to deliver here? How much of an issue are they going to have if they don't?
Well, I think this is one area where, once again, bad is bad. Okay, so I would argue that, weaker economic data is potentially good for multiples generally, at least if you're delivering on the earnings. But if you have bad earnings reports, you're going to get punished. And that's been consistent all year, which is why the average stock is down this year. The average company has not had good earnings results.
That's a good point to make, Mike, by the way, because we talk about, Jess Menton from our equities team writes about this earnings expansion that we're in, 3 quarters in a row of growth, but it's only 7, 8, maybe 10 companies. The other 490 in the S&P are not doing well. So what has to happen for them to grow, to increase their earnings, to do well?
Yeah, well, first of all, it's more than 7 companies, but it's not more than probably 30 or 40. So it's narrow. It's like a nifty 50 almost is where I would characterize it. Now, what needs to happen? Once again, we need the Fed to cut meaningfully. We need the curve to re-steepen. We need cost of capital to come down. We need the labor markets to loosen up in a way where, these smaller businesses can actually hire people at a reasonable price. They need pricing power to come back. One thing that gets overlooked is companies are losing pricing power now. So while we're all rooting for lower inflation, once again, weaker inflation is not great for earnings. Small cap businesses, small cap companies like Russell 2000 typically only does well coming out of a recession, coming out of a new cycle. Why? Because rates are low, curve is fully steepened, access to capital is abundant, and they have operating leverage again. That's just not where we are. So we need rates to come down as number one, or we need some sort of exogenous positive shock on the growth side that doesn't lead to an inflationary problem. So you tell me where that's coming from. I think it's going to be it's a challenge, and that's why we're not going to fight this trend. I mean, the momentum is so strong because it's right. Now, what worries me is that momentum is so strong, and people have a lot more exposure to high multiple stocks than they think they do. And if you have an event that's unpredictable, then you could have a real reset on valuation of 10, 15%. Like, I think the chance of a 10% correction is highly likely sometime between now and the election. Not just because of the election, but because uncertainty is going to prevail for a lot of different reasons. Earnings reasons, election outcome reasons, some of the things you mentioned earlier around tariffs, potentially immigration, Fed policy still remains uncertain. So yeah, I think the third quarter typically is that period, and it's going to be choppy. Now, we're hoping that's going to create some opportunity, but like right here, valuations to me look very, very unexciting.
So I think Mike Wilson is stuck on the same thesis he has had for 2 years, and he's been wrong for 2 years. For those that don't get what he just said, his argument has always been if inflation comes down, that's bad for earnings growth because companies have to lower their prices. For example, like Costco can't charge the same types of prices they were charging before because essentially they were able to price gouge. At the time, it wasn't price gouging when inflation was rising, right? Because they were just matching it. But then when inflation came down, they can't keep charging you the same price. And so that's going to negatively affect their earnings. That was his thesis for why September 2023, we would see this like massive recession last year. And he was right to an extent. We got a 10% pullback, but then we just started going back up to the moon because the Fed did a bit of a pivot. So his argument now to me doesn't make a lot of sense because he keeps trying to say if inflation comes down, that's bad for earnings growth. Whereas in reality, the only earnings growth that really matters to keep this market going is the Mag 7 and maybe the Mag 8 if you want to put Broadcom in there. And so if we continue to see growth on the hyperscaler side, which are companies that are not affected by inflation going up or down really doesn't matter to Google at this point, given how much cash that they have, or Amazon or Apple, etc., then I think he's going to be wrong here because there's no need for companies' earnings to materially go down if inflation comes down. If anything, if inflation comes down, the Fed cuts rates, that's helping a majority of the companies that are, need the cost of capital to go down. So the only way I think Mike Wilson's right and we see a massive 10% correction, remember, we have not seen a negative 2% day in the past year on the S&P. There have been 365 days without a negative 2% day on the S&P. For that to turn into a negative 10% crackdown, I believe we would need the hyperscalers to put up horrendous growth and to not put up, quite frankly, any growth that's substantial enough to maintain these multiples. I don't think that's going to happen. I think they're all going to grow like crazy because most of the street feels like this as well because the AI demand surge is real. So if that's the case, I think Mike Wilson's going to be wrong, and I think he's hoping for a 10% correction so that he could buy Google at 140 for his clients. But I don't know if you're going to get that again. I really don't think that's going to be able to happen. Mark says, sure, companies can't charge as much, but they should be able to buy their products at a lower price if inflation goes down properly throughout. Yeah. And then, first of all, that's a great argument, Mark. And then his argument about, we have uncertainties around the election and Fed policy. I'm like, that's not enough of a thesis to create a 10% drawdown. Uncertainties to create, there's always uncertainties in the market. And at this point, Trump, Biden, I don't know what's going to happen with that, but the market, I don't think is going to crash 10% just because of uncertainties. Now, I think they do crash 10, 15% if the Fed has no rate cuts, or if Nvidia, for example, as a company that we all rely on to keep this market going, doesn't put up the numbers. Those are two solid theses. But outside of that, just saying, well, the market's uncertain, I'm like, I don't know if that's enough to get people to sell their stocks. That'll be a little tough to see, especially when people want to buy the dip. So let's say Nvidia does fall 10%. I mean, how many of us would want to get Nvidia at $90 or $95 or $85? I mean, if that type of a dip happens, it just gets exciting because we know Nvidia's probably, they're projected to do 28 billion next quarter. Let's say they do 29, 30 billion. I mean, we kind of know what's going to happen. We know how this is going to play out. Or at least that's what most estimates kind of show for the company. And again, Nvidia is easy to predict. Google's easy to predict. Palantir is the one that's hard to predict because we don't know how big they're going to beat in Q2 or if they're going to beat at all. But we do know they're going to come in line with expectations. But Palantir is not a hyperscaler. The hyperscalers, we pretty much know how much revenue they're going to do. Apple right here, 227.82, all-time high. It closes that. And if we can project their earnings, then the market's probably going to be excited to price in that growth. So we'll see. We'll see what happens right there. Or if China, that's a black swan. If China invades Taiwan, that would not be good. That would be horrible. But as long as that doesn't happen, that would keep the rally intact. Okay, reading a little bit from this Wall Street Journal piece from Nick Tiramos. He put out a pretty good article talking about why the Fed is going to cut. So reading a little bit from this. While July may be too early for a rate cut, a mild inflation report next week which is on Thursday, could lead to the Fed doves who are more worried about the labor market weakness to argue that it is time for the central bank to tee up a September rate cut. One risk is that experience has shown the labor market can go from strong to weak in short order. While the unemployment rate of 4.1% is still historically low, it is up from 3.4% earlier last year. Hotter inflation at the start of the year derailed a possible June rate cut and have made risk management calculations more fraught. I don't want to pull up too short or too early and then have inflation stay high. That's a terrible, terrible situation. I refuse to do that, said San Francisco Fed president. At the same time, officials can't just for sure say that because the labor market is strong today, it's going to be strong tomorrow. Last paragraph from here. One lesson of the Fed's belated start to raising interest rates 2 years ago when they messed up on the transitory part of inflation, when officials incorrectly judge prices increases would subside rapidly, is that when you're too confident that your view is correct, you're prone to making mistakes. Moreover, the Fed was able to fix its mistake 2 years ago by raising rates rapidly. If you're behind on cutting rates when the labor market starts to falter, it's really challenging to get that back on track. It's just not the same thing. I think that sentence right here, if you're behind on cutting rates when the labor market starts to falter and it's challenging to get back on track, I think that is going to haunt Jay Powell in his sleep. And he's going to do whatever he needs to do to get the rest of the Fed presidents to agree on a cut in September. Because I mean, dude, 3.4 to 4.1%. If unemployment gets to 4.1, 4.2, for all the bears that are thinking the actual economy is messed up and something's going to break. If that starts to become evident in the next 4 or 5 months and you get unemployment from 4.1 to even 4.4, 4.5, yes, inflation will take a hit downwards, but at what cost? And if there's a world in which you could cut rates without inflation taking that much of a hit to the upside, but stop the people from losing their jobs, which is the dual mandate of the Fed, then I think you have this soft landing, which maybe ends up happening, and that helps the broader market as well. So I do believe, I'm convinced at this point, a September rate cut is on the way. It would be very surprising, and we can expect equities to go down probably, I mean, I don't know, 10%, 5%. We can expect a correction if we don't get a September, because at this point, Fed futures have priced in 2 of those cuts. If we don't get 2 of those cuts, and they're not going to do it in November, we know that. There's no October cut. We're not going to get November because that's right before the election, and I don't think the Fed wants to seem that political, which means it's going to have to be September to start. We're probably not getting it in July, or it's December, but by December, I don't know if like you could save an economy that got hit. You know, like if the market takes a nasty hit, then, you know, because the September rate cut doesn't happen, maybe December saves it, but maybe it doesn't. Also, I think 2025, no one has any idea what's happening in 2025. Conventionally, most of us want to say, well, Google, Amazon, Microsoft, et cetera, they'll continue to put up numbers in 2025, and this bull market will keep lasting. What if something breaks in the economy and we've had 2 great years, 2023, 2024, 2025, we don't have as great of a year, right? We don't have this green day every single day, which is basically what we've been seeing in 2024 with a couple of exceptions. If that's the case, then a lot of money hopefully is made in 2024, but it's contingent upon that rate cut happening, smooth out the end of the year. And I think we're going to have to see if the Fed actually follows through here. So let's see what happens. Investing to Live says the Fed will not cut rates this year. How many of you guys think the Fed's actually not going to cut rates? Put in the chat if you think the Fed's not going to cut rates. I you know, and again, most people think the Fed's going to cut rates. So I guess the contrarian thing to do is say that the Fed's not going to cut rates. But I still think the Fed's going to cut rates, dude. Again, they don't have to cut rates by 100 basis points, but 25 basis points is not crazy. It's just not. It's not insane. And so if we get at least one rate cut, I think that's going to help. But if we don't, I think at least the expectations are going to get hit for a lot of stocks. Wow. Some of you guys think we're actually not going to get a rate. All right, let me do a poll. Some of you guys actually think we're not getting a rate cut. Wow. By the way, Palantir insiders have not sold. Updating, it's 4:30. It should have been filed by now. So we got no selling from insiders on Palantir, which is great, dude. I mean, like, usually on a run up like this, just judging by historical standards, they tend to sell. Remember November 2023, it got to $21 and we saw a massive sell-off, got like 4 or 5 million shares that were sold. No sell-off is really nice. Okay, rate cuts this year, yes or no? Meaning at least one rate cut. That's the poll. One rate cut this year, yes or no? Felix and Kevin expect a cut next month, but it would be political. If we get a cut in July, oh boy, that's going to be the most fun cut ever. But I don't think it would happen, dude. It would seem political. It would definitely seem political. And also, I don't think inflation's going down that dramatically on Thursday for them to justify a July cut. But if we get August inflation kind of get us into that 2.8, 2.7 range, then we should justify the September cut on headline CPI. The question is, does the S&P pump or dump when he announces the cut? I think we pump, bro. I do not think this is a scenario where we raise rates and the S&P is upset about that, or the market's upset about that, because we're all pricing this in. We all kind of built up a lot of the expectations and assumptions off the inevitable rate cut, which means even if the S&P doesn't pump, I definitely don't think it dumps. And I think small caps rally as well. I think companies like Robinhood rally. I think even companies like Palantir that aren't that affected by interest rates because they have no debt, I think they are going to have momentum. I think there's going to be momentum, even if those companies pull back over the next few months after that initial decision. That's really based on, how the economy operates after we get a rate cut. I do think we end up getting that rate cut. SoFi potentially pumps. Yeah, SoFi is another one that would really benefit from more liquidity to be able to give out more loans. 66% say yes, we get a cut. All right, so the cut's in the majority. So if you were a contrarian, you would say that we are not getting a cut. Let's get an update on Bitcoin. Anthony Scaramucci still feels 100,000 by the end of the year is happening. Let's get his thoughts, and we'll go from there.
Post 9 for his crypto outlook, among other things, is Anthony Scaramucci of Skybridge Capital. It's good to see you. Welcome back.
Good to be on.
What is going on? I know I ask you this every time, but it's such a volatile asset class that the question needs to be re-asked, because it was at north of 70, and now here we are.
Just promise me if we get to 100,000 at the end of the year, you'll invite me back.
I definitely will.
Promise me.
I definitely will.
I won't have the basketball trophy, but you have a lot of things going on at the same time. You had the German government selling some Bitcoin. You have the Mt. Gox bankruptcy, which has been a 10-year drawn out affair, is now going to be releasing about 140,000 Bitcoins. And so Skybridge, alongside of Fortress, participated in that. And so you have a combination of these things going on at the same time, that there's been some selling pressure in the ETF. And so when that happens, Bitcoin is a volatile asset. You also had a halving, not to get into the Bitcoin jargon with you, but
I think our viewers are well versed on that.
Okay, so every time you have a halving, a result of which it forces the miners to sell some Bitcoin to keep up their revenues, which puts temporary pressure on Bitcoin. But we still love the fundamentals of Bitcoin long term. And I do think, as I said, it'll be 170,000 post halving, but I think it can get to 100,000 by year end, but it has to chug through this slog right now. One last quick point.
Sure.
FTX is going to be releasing shortly $16 billion roughly of cash.
I did not know that. That's interesting.
To investors that had their accounts at FTX. And so that's very good news for Bitcoin holders, I believe, because a lot of that was in Bitcoin. It got frozen in the bankruptcy. It got dollarized, unfortunately.
Who had an FTX account? Put in the chat if you actually had an FTX account.
Low numbers for Bitcoin, but it's going to go back to those account holders shortly. And we think a lot of that may flow into the assets.
Oh, I was going to ask you that. Do you think, at least for those people, right, in their minds, there's some tarnish on the story enough that they won't want to assume the risk again in crypto because of what happened to them in the first place?
We call these things life chips. If you get a windfall back like that, you're counting on not getting that money back. Now that you're getting it, you may buy a car, you may buy a house, you may buy a summer house, but I do think 40 to 50% of that will go back into the asset class. I mean, these are hardcore people. Remember, they're early adopters too. If you had an account at FTX, you have an account at Coinbase, you're considered to be an early adopter in the digital asset space. And so early adopters, have typical loyalty to the asset class.
You raise another interesting point when you mention the German government selling. How big of a risk do you think sovereigns in general are to the story? We have to figure that sovereigns are large players, right? And the ebbs and flows of government and things that happen. Is that a longer term risk more so than people have thought about?
I don't think so, Scott. And I'll take you back to the situation, the early days of Uber. No government wanted Uber, no administrator wanted Uber, no mayor wanted Uber. All the regulators said no to Uber, but the people wanted Uber. And one thing that just happened today in the GOP platform, they're going to have their convention next week. Right there, glaringly in the GOP platform, is the protection of digital assets and the protection specifically of Bitcoin. So I think that's a huge mistake by the Democrats. I feel like they're fumbling the football on digital assets. It's not a niche business anymore. Okay, you could go by the Mike Novogratz discussion where he thinks there's 85 million wallets. I think Coinbase put out something like 50 million wallets. Let's cut those down. Let's say there's only 20 million wallets of eligible voters in the United States, and let's say 10% of them are single issue voters. We've got 2 million potential voters in a very close, very narrow election being resolved by 6 or 7 swing states that could be single issue digital asset voters. So to me, I think it's overwhelming conclusion that this will be an acceptable long-term asset class in the United States. And if that's the case, I'm not worried about the other sovereigns.
All right, Mooch. I hope he's right, man. I hope he's right. We need 100K. I hope he's right, dude. That would be nice, dude. All these crypto stocks that are just waiting for Bitcoin to go up. Bitcoin, 56,379. Robinhood up a little bit after hours, 2211. CleanSpark took a beating today, down 4%. Coinbase down 1%. MicroStrategy actually was green a little bit today, up 0.69%. And then Marathon HUD. The thing about Bitcoin is it went up and down so much today that I think it confused a lot of the crypto stocks. Usually it's down. All the crypto stocks are down. And then it goes up. And then all the crypto stocks go up. But it went down and up and down and up and then finally ended green. But by that point, so many stocks in the crypto space got beaten up. And so a lot of them kind of just ended red. Bitcoin right here at 56,357. Let's see. We need one hundo. Arnie just posted that Palantir apparently is up 69% over the past 6 months. Dude, that's incredible. That's so cool. It closed 69%. Yeah, look at that. It's up 69% in the past 6 months. Dude, this is great. This is like, who would have thought? Like, we're Palantir's up so much, we're all now kind of feeling a little jittery that like, oh, is like a little pullback going to happen because it's up so much. But I'd rather feel jittery that a pullback could happen rather than stuck in the hell of $8 or $16. We went through that hell 2 times, once in 2022 and the other one in 2023, of basically being stuck and seeing no momentum. Let me. What do you guys? Would you guys rather be stuck in a range and not moving up, or would you rather be going up like every month, but like afraid that there's got to be a pullback coming because it's just moving up too much? Which one would you rather be? I think I would like the latter. You know, I'm not a tall guy. That's why I climb on ladders, and that's why I would like the ladder. That was a good one. I just thought of that on the spot. That was a good one. But I think I would like the ladder because when you're on the ladder, you keep climbing up. And even though you could fall off sometimes, the trajectory is up. Wow. I doubled down on that analogy and I made it even better. Anyway, I would like the ladder. 27.69 on Palantir after hours, up 0.04%. Because I remember being stuck at $8 and $16 and dude, that wasn't fun. That's kind of like how SoFi is right now. Like I relate very heavily to the SoFi people because all the Palantir people felt it. Just like stuck, just fucking looking at grass get green, like just not moving. I'd rather move and be a little scared that we come down than be stuck and not moving at all. Someone says it's latter, not ladder. I know, that's the joke. Gosh, that's the joke. That's the point. If it's going up, let's get a hawk to a dude. Have you guys seen the podcast with this girl? Maybe I should stream the podcast one day, like on a Saturday, and we're just chilling. We should watch her podcast. She's turning into a legit celebrity. She has 1 million followers on Instagram. Do you know how hard it is to get 1 million followers on Instagram out of all places? She got 1 million in like 5 days. It's crazy, dude. I think on Twitter she's like at a couple 100,000 as well. Amit, you are in love with her? Nah, low-key I am, dude. But because she's so humble, dude. Like you guys got to see her Insta. She's from a small town in Tennessee, dude, and she's so humble. She doesn't want this life. She's not trying to be famous. She's not like, this wasn't her plan. It just happened naturally. That's the best way for this stuff to happen. Her name is Haley, by the way, Haley Welch, and she's just a cool girl, dude. She's just a cool girl. So I kind of like the way she's kind of played it out. She needs to do an OnlyFans. I think she'll be talented enough to not do an OnlyFans. I think she'll be talented enough. I think she'll find a way. See, look, this is a 30-second clip. This is an Instagram reel. This is a 30-second clip. This is her story.
Belfast, Tennessee. It's a little small area near Lewisburg.
I know we can't play this, dude. The fucking music, dude. YouTube's gonna get copyright. But the point is, I'll share it in the chat. You guys can watch it yourself. The point is, she's from a very small town, and she's doing her thing, and so I like it. She needs to take the bag and run. What's her talent? So I think this is the wrong framing of thinking of this. Like in at least American capitalism, the way social media I have seen work over the past decade is that if you have a moment of virality, it is up to you to capitalize on that moment. I don't know what she's going to talk about. I don't know what reality shows she can make. I don't know what podcast she can make. But the point is there are opportunities. I mean, first of all, she's from a small town in Tennessee with like, you know, a couple thousand people. She came to fame overnight. She came to fame over something that's, you know, sexual. So there's like all these different angles to it. I think she could start a podcast, or she could start like a little reality show about her life and bring awareness to what it's like to come from Belfast, Tennessee. I think there's a way to do it. But I don't think the question is what's her talent. I think the question is I don't think you need to have talent. I think you need to be able to capitalize on the moment. And if you can capitalize on the moment and you have a good team around you and you have a good sort of plan, then you can win and you can make a lot of money. But the question is, you know, is she going to be able to capitalize on the moment? She's at 260,000 followers on Twitter. Yeah. And she's at 1 million on Instagram. She doesn't need to do an OnlyFans either, dude. She doesn't need to do an OnlyFans. Like, it doesn't have to be sexual for her to win. People are interested in her at this point, you know, regardless of why they're interested, even though it was for a sexual thing she said. They're interested in her. She has the attention. She got 1 million followers. I mean, once you get the attention, you get the attention. And now she just has to put out some content that's interesting for them to see. Okay, let's listen to Adam Parker on what he expects into this earnings season. We are starting officially this week on Thursday for earnings. So let's get his thoughts and then we'll go from there.
As you know, takes us to our talk of the tape. Whether
will matter for sure. No big earnings pre-releases negative here in the first week, so I don't expect a bad earnings season. My suspicion is that September is when you'll see downward revisions. The numbers for the second half of the year are still too high. And so
you think they're too high?
Yeah, they are. And they're too high for next year. 14.5% growth is what's in the numbers for 2025. I think
does
that's
that
too
mean
high.
that the market multiple is too high as well? They're plus 21 times, a little more than that?
Yeah, I think the problem is you walk in the door now and you say, okay, what do I need to believe to get 10% plus upside, 6,100 on the S&P, right? I have to look at 26 or 27 earnings, or I have to embed a lot of multiple expansion. That's why people have been cautious. The question is, does the narrative change at all about the dream that AI can give me on earnings in the out years? If that narrative changes, we'll get a correction in the equity market. If people still believe the dream and it's still innocent until proven guilty for a lot of companies, it could be okay. I kind of look at it and think equal chance, 10% up, 10% down.
Still, because you've been saying that for a while. It still feels that way?
It feels to me like it's hard to get there. Look, we've been directionally, positive on the market, I'd say, but not, I think it's hard to get 10% plus upside without a dream that 26 and 27 earnings are going to be up a lot.
Is the dream, Court, the rate cuts that the market is expecting? Is that?
Yes, in my opinion.
The key to the dream?
Yeah, that's been the whole focus. Like, I feel like a broken record talking about the Fed going to lower interest rates, but that's really what the markets continue to be focused on. And as we continue to get...
Yo, who is this? Who's this girl? We've never seen her on CNBC, but she's pretty. Who is this? I've never seen her before.
Data out, right? We're seeing that unemployment ticked up to 4.1%, which is showing a slowing of the economy. You're seeing that if the PCE numbers continue at that 0.08% month over month, we'd actually be on...
Of course, her name is Courtney. Of course. OGs know. The OGs of this channel know. Of course, her name is Courtney. It had to be Courtney, didn't it? It had to. That's great. That's amazing.
On track for that 2% year over year target by the end of the year. So all of this is really just showing that there's more and more of a higher likelihood that the Fed's going to cut rates at some point this year. And interestingly enough, we're seeing more money go into cash. We're over $6.1 trillion. That amount just went up last week by the highest amount in the last 2 months. So people are still nervous. There's still a lot of money to go in the markets, which just adds this whole idea that you can eventually see a melt up. People are chasing momentum, but once rates go down, those money markets aren't paying 5%. That money is going to make its way back in. And I think at a certain...
Bro, she sounds like me. I know it's not that complicated to say what she just said about money markets, but she's right, dude. When rates start coming down, or you think they're going to come down, you're not going to sit in 5% in money markets. You're going to chase yield.
At some point in time, you are going to see that happen. The question is when, but I don't think you want to be behind that.
I'll say something crazy. Okay, so if there's one maxim that we all believe in, I've said and written this 100 times since 2011, is don't fight the Fed.
Right.
And yet, I know the market gets increasingly anticipatory. Once we learn something, then it's 3 months before. Maybe the crazy thing this cycle will be that you kind of, maybe you sell the first cut. That basically you're already paying for some of this accommodation, and that people are going to say, all right, well, I buy the market. I bought it really since Jan 23, thinking we were close to the hiking, and now maybe it's hard to get the multiple expansion from here, and I need the earnings to come through, and so maybe that's what's different this cycle. Is the one thing everyone believes in is no longer the case.
Court, you say one of the biggest risks is the Fed cutting too soon. Now, I wonder, as the data has been a bit softer over the last couple of weeks, whether we're starting to come into the risk zone of the Fed cutting too late, that by the time they actually do cut, it's too late.
It's a fine line. I mean, it's a tough position that they're in, right? I mean, that's what they don't want to do, is cut too soon and create a melt up, or cut too late, and then the economy's in a bad position. I don't think we're there yet by any means. I mean, I think if they are cutting, and it's a pretty high likelihood they're going to cut September, definitely by, well, not definitely, but a higher likelihood by December. I think in that range, the economy is still holding up. You're saying inflation is increasingly becoming a concern for consumers. They are pulling back, but overall incomes have been going up faster than inflation, which is why the economy has continued held up. So if that continues to happen, I don't think they're going to be behind the curve, but it's a tough position they're in. I mean, they need to try to get that right.
I mean, look, this is why the stock market is so interesting. There's so many conflicting narratives because, again, her retort to the argument that the Fed could cut too late is that if incomes are rising, then consumers can put up with this. By the way, the TSA, they just said again that they had 3 million people on Sunday cross the the TSA check. I don't know exactly what it's called, but like the check to the check to make sure you're not like going to do another 9/11 or something. So from that perspective, it's really interesting because people have money to go traveling. The security screening, that's what it's called, security screening. They have money to go traveling. 3 million was 2 weeks ago. Now this Sunday they did another 3 million. And so consumers obviously either have enough savings or they have enough money that they're getting from their jobs because they got increases on their wages to be able to afford all the traveling they're doing, or they're putting this all on their credit card, which is not the best situation. But the point is 3 million people traveling in one day. That's not a joke, dude. That means people have money. And if people have money, then that money inevitably is going to make its way into the economy, hopefully through consumption, because that's what Americans do. We consume, and that'll help company earnings. And Delta, we'll see the first thing on this weekend. Delta, or not this weekend, on Thursday, from Delta's earnings. If Delta is able to put up the numbers that we want to see. Look at this. So 7/7, this was yesterday, 3,013,413 people. That is 500,000 above, or about 400,000 above 2023 levels at 2.6 million. I'll put the website in the chat if anyone wants to see this. So we had 3 million on July 7th, and then I think we had 3 million. We had on June 27th, we had 2.9. So we got close, and then we had 2.9 on June 28th, 2.9 on June 23rd. We were 4,000 away from 3 million. I mean, dude, this is a lot of traveling. I mean, the airlines should at least be making a significant amount of volumes, and as long as their margins are decent, they should be making money. And when people travel, that's great for the entire economy, dude. All the local areas that are bringing in tourists, all the stores and restaurants across these different travel locations, cruise lines benefit from this. Like, there's just more consumption happening. Hopefully, that's not a strain on inflation, but it also does show that earnings might not be as bad as people think it's going to happen. All on credit, yeah. If it's all on credit, that's bad. I don't think it's all on credit. I actually checked my my mile. I have like 13,000 miles. I just realized, like, so even I have a bunch of miles. You know how you get miles is when you spend your credit card. So maybe all these people have been buying so much shit with their credit card for the past 6 months, racking up all these miles. And instead of paying their credit card, they're going on vacation to not think about anything. And they're spending their free miles, technically free miles, even though they have credit card debt. That could be one way the economy blows up. That could be one way. Hopefully that's not the case. Hopefully that's not happening. So we'll see. 13,000 miles will get you free peanuts. Dude, United charges 800 miles just to get $8 of Wi-Fi for 6 hours. And I used to get on flights and I used to never buy Wi-Fi. I would use that as an introspective moment to think about the nature of my existence and my life up to that point on those 6-hour flights, because usually it would be like a California flight. Now, if I'm on a flight for 1 hour, dude, I need the fucking Wi-Fi. I don't care how much money it is. Like, I need the internet. Like, I don't need to think about my life. I need the internet. So I spend a lot of miles just making sure I get the interwebs so I can consume. Palantir 2771. Edmund Paris in the chat says, Amit, do you think adding to Palantir at these levels is still smart? First of all, Edmund, is your last name actually Paris? Because that's really cool. Could you imagine if my name was Amit Paris? Dude, the most elite name in the world would be Jackson Paris. I think I need to name my kid Jackson Paris. That'll be his first and middle name, and then Cookrager. Jackson Paris Cookrager. But the Cookrager part will ruin everything. But Jackson Paris, that is the most elite name in history. So I think adding Palantir at these levels is not necessarily smart in the short term, because obviously when a stock's up almost 70% year to date, you're going to see some momentum to the downside naturally. It even happened with Nvidia. Remember, Nvidia got up to 1,000, then it went all the way down to 770. I don't know when that pullback is coming or if that pullback is coming. So it is smart to add Palantir if you believe in a 10-year story, which is what I believe in. So honestly, I believe in like a 30-year story, which so it's like not that much pressure on selling or buying. And so, it is what it is. If it goes down, you DCA. But if you want to flip it into $32, next week, then yeah, you might be disappointed or you might be rewarded. So the answer to, is it smart to buy Palantir right now? Conventionally, no, because it's run up a lot and you want to wait for a better entry point. But if you don't care and you just want to start DCAing, which is like, quite frankly, the only way you can really get started is you just enter in and you deal with whatever happens. Then yeah, but you got to have a time horizon that's obviously more long term. I know it's a basic answer, but that is the answer. You just sell some puts, dude. If you want to buy 200 shares, you can sell some puts at like $25. You could put up 5,000 in collateral, get paid some premium, and then if it goes to 25, you'll get exercised and you'll be happy with your shares. That's another reason why I love selling puts, is you get paid to wait. If you're not super greedy on getting the shares immediately. And if you do feel things are a little bit overbought. You get to take some time. The RSI on Palantir on the monthly is actually not, it's at 62. On the daily, it's at 50. And see, that's really nice. So I'm not an expert on RSI, but my understanding is as a price settles into a range, the RSI that conventionally was overbought and way above 70 starts to normalize because the stock itself normalizes in a range. So now if Palantir was like $40, the RSI would be like $1 trillion or something, right? But now that the stock's kind of normalizing in this $26 to $27 range, I know it's only been a couple of days, but let's see if it stays there. The RSI should normalize as well, and we shouldn't get to necessarily that overbought because the stock's theoretically not overbought anymore. So on the monthly, it's below 70. On the daily, it's in the middle. It's at 53. And then, yeah, on the weekly, it's in the middle. And then on the daily, it's at 60 right now, which is not bad. Not bad at all. I might be wrong on that analysis on the RSI, so let me know in the chat. But that's what I've like from my studying of the RSI, because that's the one I've been really trying to understand deeply. Like Nvidia's RSI, if Nvidia, if this was June 2023 and Nvidia was 1200 post split, when Nvidia was just at 300, then yeah, that would be a ridiculous. There's no way like that RSI wouldn't make any sense. But Nvidia stayed in this 100 to 120 range for almost 2 months now, so it's since May 2022. So that RSI is able to normalize. Now, if Nvidia goes to 160, then the RSI breaks out. But if Nvidia goes down to like 95, the RSI gets more in the oversold range as well. Sideways is always good if growth is coming. Agreed. 100%. 100% agreed. Palantir volume was over 50 million. Wow, I didn't even see that. Yeah, let's look at the volume on some of these stocks. So Palantir volume was 59 million. Nvidia volume was 233 million. Tesla volume, 156 million. Tesla 253 after hours. Nike volume was 30 million. Walgreens was 30 million. Starbucks was 9 million. Robinhood volume was 10 million. Intel, 79 million. Intel, even up after hours, 34.19. Let's go on Intel. Not bad. And then ARM's volume was about 10 million as well. Google's volume was 20 million on the day. Not bad. Mark says RSI is a powerful tool, but not a tell-all be-all, of course. Yep. I agree with that as well. Chris says, I was buying a position down into Palantir between May 2022 and 2023, and media said it was a crap meme stock. Now it's up to high 20s, and everyone says it's a great company. Things change, don't they? Things change overnight. Even though it took a year for things to change, it wasn't overnight, but it feels like it's overnight now, right? That's crazy, right? That's crazy. It's that's what the video I made on July 4th was kind of talking about that exact subject, Chris, about the journey of covering a company from its quote unquote meme-ish stage into becoming a behemoth of the company that it is right now. And look, you could say the price action is getting a little too aggressive right now and it's going up too much, but I think I already talked about this. I was going to tweet about it more in depth, but I think the reason Palantir is getting the premium is because when a company like Hebia AI that we talked about 30 minutes ago is getting almost a $2-3 billion valuation for doing what AIP does, Palantir is going to have to get a premium, dude. There's no way that Palantir is worth less than some of these startups, and Palantir is, producing real revenue and real profitability. So what was once seen as like a stupid meme stock because they really couldn't go to market, everything has changed. They go to market, 1,400 boot camps, the massive government deals, massive commercial growth in terms of 70% year over year in customer clientele. Karp has refined his message. Karp's releasing a freaking book in February. On today's Daily Palantir episode, there's a segment where I talk about the importance of the book. I think the book is going to be free marketing for Palantir. There's going to be thousands and thousands of people across the world that read that book and at least get intrigued by the concept of Palantir. And I think the media is going to have to take it differently, dude. The media is going to have to think about Palantir differently as the stock continues to defy expectations and as the growth continues. And we're still sub 100 billion. Like, I'm not saying we definitely deserve to be $62 billion right now, given we got to see what happens in Q2 and the growth and all stuff. But the fact is, AI exposure, like real AI exposure, to not be in the hundreds of billions of market cap or the trillions of market caps, to still be able to get it below 100 billion and hopefully have the chance for it to get to 3, 4, 500 billion, which would be a 10x from here. I mean, I think the market's going to appreciate that opportunity. And it'll be fun to see. It'll be very, very, very fun to see how it plays out. Okay, so that's what we got on Palantir. What else do we have? Brofesco says, believe in your research and intuition. Yes, that is also something that's very important. Especially if you keep dollar cost averaging, dude. When you're dollar cost averaging, when you're in the hole. The one thing I love about Palantir is that I just got a DM from Tasha from ARK Invest. I thought this was a real Tasha. I hate Twitter sometimes, dude. I thought this was the real Tasha. I was like, yes, let's talk. It's some bot. Look at there. Hello, sir. Nice to have you here. How is trading going with you? Elon's got to do something about these bots, dude. It's so bad. It's so bad. Oh my God. Anyway, what I was gonna say is when you're DCAing, when shit is tough, all you have is conviction, dude. Russ, he's one of my favorite rappers. He has this good line that in 2006, when he was broke and he was trying to become a rapper, all he had was his confidence. That's it. You had no money, just confidence. And same thing with investing. I mean, you have some money, but when you're down a lot of money, you've got to have confidence. And if you don't have confidence, that's it. You're done. You are done. That picture even looks like a robot. Yeah, it's too much, dude. It's too much. Too many, but the bots on Twitter are not getting better, quite frankly. They're getting a little worse. Amit, were you on Clubhouse during the pandemic? I tried Clubhouse here and there. That app, for some reason, it's still number 30 on the App Store in news. I can't believe people still use that app. Do you guys remember Clubhouse? They were valued at 4 billion. Yeah, number 38 on 36 on the news charts. I would be willing to bet 0 out of the 853 people here use Clubhouse, dude. 0. It's like they rebranded it into group voice notes. It's not even live audio rooms anymore. It's just the fact that these guys got a $4 billion valuation. That was the tell that 2021 was a bubble. And I don't think that's happening right now, which is why I don't feel, a massive bubble is forming. Now, Perplexity getting a $3 billion valuation, that does feel a little bubblish. I'm not going to lie. That does feel a little bubblish. But outside of that, I don't think we're seeing massive startups get ridiculous valuations like that. Okay, a couple things I want to share. So the Republican National Committee just put out this agenda about defending Bitcoin mining and self-custody to create the greatest economy on earth. That is their argument. So this was chapter 3 of the Republican National Committee's thesis on the economy. And they're going to have the national convention in a couple of weeks. So right here, Republicans on crypto, they said, we will end the Democrats' unlawful and un-American crypto crackdown and oppose the creation of a central bank digital currency. We will defend the right to mine Bitcoin and ensure every American has the right to self-custody of their digital assets and transact free from government surveillance and control. So another, I guess, win for the Republicans. If you are a crypto single issue voter, they are giving you what they want for your agenda. And then Bill Ackman today said he's voting Trump. This was, we all kind of thought Bill Ackman was leaning towards Trump, but today he made it official. If it is Biden versus Trump, he is going to be voting for Trump. So this is the reason this morning, when I was talking about Biden not really being able to talk on the ABC interview and some of the problems with him not saying yes to do a cognitive test, it's because people like Bill Ackman, everyone's like, you have to critique Trump as well. It's like, yeah, Trump's not perfect, but people like Bill Ackman, who's a lifelong Democrat, he's going to the other side. So if your argument is, well, Trump's the worst president in the world, if that's what you feel, then you have to accept valid criticism over Joe Biden, because when you've got billionaires like Bill Ackman, who could give a lot of money to Biden and actually make a dent in terms of his campaign doing something with not only his endorsement, but also his financial contribution, when he goes to the other side, then you've got an issue, dude. You've got a real issue in the context of how Biden's communicating to the broader public. And so that's why analyzing Biden on these interviews and how he's doing is very important for the broader markets. And so it seems like Ackman switched. Now, if they replace Biden, maybe Ackman goes back to the Democrats. But the question is, who do they switch him with to see? And so we'll see how that plays out. Tyler says, I made my kids so much money from recommending Palantir that I can't stop paying my life insurance policy premiums. They don't need it. Yo, that's crazy. That's incredible. I made my kids so much money from recommending Palantir that I can stop paying my life insurance policy premiums. They don't need it. Dude, that's incredible. That's crazy. That's so crazy. Dude, Palantir's done well. It's done very, very well. And now we just got to end off the year in the right direction. And again, as much as I think we could fall back to 24, 25, the stock doesn't look like it has the sort of characteristics of wanting to go back down. It keeps breaking out, and we saw it last week constantly touch 26, even though it would fall back down to 25.80, but it kept coming back. And so when it keeps coming back, it's really exciting to see it get to this level. Clive says, I have 10K on Palantir at the moment. Will it make me 2 million by 2034? I don't know if it goes to 2 million. That would would be quite a return in the next decade. But maybe, you never know. I think 10K to 2 million is asking for a little bit much, but I think 10K to 100,000 to 10X from there, that's not the worst in a decade if we can get there. 2.3 million is gonna be a little tough. Cool. So that's what we got on Palantir. I think that's pretty much it in the context of the news. There's nothing else that crazy. We did see Germany. They sold over 16,000 Bitcoin today. We talked about that. Oh, one thing here in the United States, southern part of the country, 300,000 homes are for sale, surpassing the 2006 bubble peak. Quite interesting, right? So in the South, in the United States, based on the U.S. Census Bureau, 300,000 homes are for sale. No one's buying them because no one wants to pay almost an 8% mortgage. And so this is another catalyst. As soon as the Fed lowers rates, if we see mortgage rates come down, we might see a lot of houses start to get bought up, and that creates another form of stimulus for the broader economy. That could hurt with inflation, but if we do see those prices come down because there's more competition over the houses, then that could also counteract inflation as well. So we'll see. We'll see how that plays out. The insurance on homes right now is wild. Yeah, insurance on cars and homes is high. And again, J-Pow will be streaming the testifying tomorrow from Congress. I think they're going to ask him some dumb questions. Let's end on that. What do you think? What question do you think Congress is going to ask him? But I think the core argument Congress is going to try to make is that average Americans can't afford shit because interest rates are too high. And I think his argument is going to be, yeah, if you guys didn't print like $10 trillion, we wouldn't have to keep interest rates high. But I do think there's going to be some dumb questions. And the first dumb question is going to be, why haven't you got interest rates? Another dumb question is going to be, are you political or not? They're going to try to get him to admit on camera that he like either loves Biden or Trump, which is not going to happen. But, you know, Senator Warren or one of these guys are going to try to get him into a pickle. And so it's just going to be dumb questions. But hopefully he's able to navigate that. And hopefully he does say something that's a little bit different that gives us an inkling on how he thinks about cutting rates. But again, his argument's going to be data dependency. So I don't know if the markets are necessarily going to read into anything he says until we get those CPI numbers. When can we start printing more money? Yes, that's a good question. It's going to be funny, dude. It's going to be funny. Do you know about Palantir and Archer Aviation working together? Yeah, Archer Aviation was at AIPCon 3 in March. They are using Foundry and AIP. I don't know how well they're working together. Archer today, the stock on Archer today, Archer stock, it was up 3% today or something. Yeah, it had a decent day, but they're working with Palantir, but not like on a massive level. Archer was up 1% today, 1.82%. But yeah, they are working with Palantir. Can't they just cut 0.1, so like 10 basis points rather than 25 basis points? I actually don't know. Is the Fed allowed to cut only 10 basis points? I feel like they can do whatever they want. I'm pretty sure. So theoretically they could cut, but the thing is the market is pricing in 50 basis points. So if the Fed cuts, I think the Fed doesn't necessarily want to, make the market get too upset. Either they're going to cut or they're not going to cut. But if they do cut, I don't think it should be like a little baby cut. It should be like a real cut, which 25 basis points still is a baby cut, but 10 basis points would just I don't think make that much of a difference. But I'm not sure if they're allowed to do 10 basis points or less than 25. Okay, cool. Well, that's what we got. All right, let's see what happens tomorrow. So I think tomorrow's gonna be a live market open stream because we'll be live until like 9:30ish and not until like 10. And then I think at 10 a.m. J-Pow is going to testify. Maybe it's at 12. Let's see. Jerome Powell testifies. Regardless, we'll be live and we'll be covering it. Yeah, it looks like it'll be around 10:30. And so we'll be live covering that for a couple hours, see what he has to say, and then go from there and see if it has any impact on the markets. All right. Not bad. 27.50 close for Palantir. Tesla 250. Let's see if the momentum can keep going. I will have a daily Palantir video in about an hour that'll be discussing Citi's report today and the impact of CARP putting out his book. So we're going to talk about those two things. That's kind of the core things for daily Palantir and keep going from there. All right. Thank you, everybody. Have a good one. I'll see you guys tomorrow morning on the Market Open. Bye, everyone. Good night.